Well, folks, we have something absolutely epically massive going on in the market here today, and I want to explain exactly what's going on here. There's major trends being broken in this market right now that I want to show you guys here today, and if you're thinking of even the possibility of bottoming out in the market, I have something very important to show you today. This chart is going to blow your mind when you see it, and this is something that I haven't really seen out there at all, to be completely honest. There's one individual who posted this, and unfortunately they don't get the most coverage, but this is absolutely game changing, okay? And what happened today is very important for the trajectory of the market in general. And I want to show you exactly kind of what's going on here. So, by the way, if you didn't know, it's a good day in the market. The Russell's up about 30% here today, roughly. Nasdaq's having a very good day, up a little less than 3%. So definitely a good day in the market. If you aren't green today, I don't know, how you can possibly be green in your accounts, because it should be a green day, right? And meanwhile, the small caps continue this kind of upward trajectory they've been on for the past several trading days now. Look at something like Honest, it's up 31% in a matter of just a few trading days for the stock. It's been, quite a rapid rise. The Chef, 23% in just a few trading days. When it comes to these small cap stocks, I'll explain in just a moment. Oatly, 33% in just a few trading days. Corsair Gaming, about 21% in just a few trading days. When I talk about small cap stocks, and when I talk about, the moves that will happen with these stocks, when the market turns, whenever that is, and we could be in a turning moment now, and I'm going to show you some stuff that's very important in regards to if you're thinking about that. But you got to understand, like when we get a true turn in the market, these small caps will make moves like you've never seen stocks make before. And you're getting just a small glimpse of it. I mean, we're just off a few, we're a few percentage off of, all-time lows, or not all-time lows, but 52-week lows where the Russell was and the Nasdaq was, right? And look at how much a lot of those stocks have just bounced in a matter of a few trading days. You're seeing 20, 30% type upward moves. Now imagine a scenario where the Russell goes up 10%, 15%. Not even, that wouldn't even be remotely close to all-time highs, just 10 to 15%. Imagine how much those stocks move in that given scenario, right? Now, those stocks have way oversold in a down market and a bad market, but imagine just for a moment, if we get any sort of momentum in the market, the moves those stocks will make will be absolutely beyond insane, which is exactly what we're seeing play out right in front of our eyes right now. And so, these stocks are cast away as kind of like, thrown away in a rough market, right? And folks just throw these type of stocks away. But as soon as the market goes even a little bit bullish, I mean, these stocks fly to the moon, as they say, and the moves are incredible. And that's the way it plays out every single time you're coming out of a vicious bear market. What is seen as small caps or more speculative plays, those ones bounce the hardest. It is not stocks like Apple and Microsoft, right? Stocks like Apple and Microsoft will usually hold up the best during a crash, during a bear market, something like that, right? But in terms of what's going to give you the crazy ROI, that insane ROI over the coming years as you come out of a bear market, it's always those small caps that have the big growth, that have the numbers to justify, where their stock prices are going over the coming years, okay? And so, but those ones they're just completely forgotten in a tough market, right? And no one cares about those when you're in a bear market, essentially, okay? You look at big tech here today, and this shows you a great example of kind of, what's going on in the market. We get a little bit of a risk on day, and look what AMD and NVIDIA do. 8% and 5% move on a risk on day, and look at right behind it. Tesla also 4%, and Amazon's about a 4% move. So, if you're even thinking about big tech, what's going to move the most when you get some positive momentum in the market, it's going to be those sorts of stocks. And those stocks have been hit hard, right? Tesla, it seems like just yesterday, Tesla was $1,200 a share. It's $758. Do the percentage decline on that one. Amazon, it seems like just yesterday was $3,700. And it's $2,300 today, and recently it hit lows of $2,100. For Amazon, you got to be flipping my flapjacks. NVIDIA's fallen dramatically. AMD's fallen dramatically. And, those companies are extraordinary. They got beautiful business models, not just in the short term, but for the long term, right? AMD, for instance, Lisa Su, in the management team, I think they beat earnings something like for 5 years straight, or some ridiculous number. Like I heard that recently, and I was like, how is that even possible? There's some great companies I know of that beat earnings pretty consistently, but for 5 years in a row, what? That's just ridiculous. And so here you are in a moment where you just get a little momentum, and look what these stocks do. And I think that's an important thing to remember, is just when we can get a little momentum, my gosh, Wall Street's buying Wall Street today, as I say, okay? This is my banking watch list. It consists of Goldman Sachs, Wells Fargo, JP Morgan, Bank of America, Deutsche Bank, and Ally. And Wall Street's buying Wall Street today. And that's just the bottom line there. And look at those stocks ready to fly, okay? So I want to get into some very important things here. I want to show you some charts that you've probably never, ever seen in your life before, including on my channel, and exactly kind of what's going on and why this is so big and why this matters for the market, okay? I do want to shout out FTX US, which is the official crypto partner I personally use for any moves in the crypto market I'm looking to do. You might have heard of them before. They're partnered with folks like Tom Brady, Steph Curry. They have the fees that are among the cheapest in the entire industry. Like, it's beautiful. It is a crypto exchange millions of people's trust. And right now they got a pretty darn epic proposal right now, which is you can get up to $100 in free crypto by using my link down there. That's the pinned comment, and using my referral code Holy Smokers, up to $100 in free crypto. And basically every trade you do over $10, you get free crypto as well, which is pretty darn awesome. And I do know that there's a lot of speculation that stocks are coming to FTX very soon as well. They don't have they're not ready to necessarily announce it right now, but yeah, from what I've heard, the rumors are it's going to be pretty darn epic. So definitely take advantage of that while they're still giving out the $100 and up to $100 in free crypto. And don't forget to use my referral code Holy Smokers. That will be pinned comment down there. And also, you can set up your accounts for recurring buys. So whether you're trying to buy Bitcoin, Ethereum, whatever, you can set it up so you're doing recurring buys each week. It's pretty darn awesome, okay? Alrighty, so this is not a popular YouTube channel, but I got to give them some respect. I like these guys. It's a channel that has like 4,000 subs called Plant Stock, essentially, okay? And they were showing this chart, which I absolutely blew my mind. And, I got to say, like, YouTube's not in the best place right now. It's just not. You got, a lot of channels that just make content about the biggest creators, and it's kind of like a TMZ type thing, right? Then you got a lot of channels that just aren't even posting anymore because the views aren't what the views used to be in 2020 for a lot of these channels, right? Fortunately for us on this channel, we're at, record highs in the history of the channel, but for every other channel, they've fallen off a cliff. And so YouTube's not in a good space when it comes to stock market community. And so if I see a channel that actually has promise, I'm going to share it with you guys. And I got to say, this channel actually has promise. The stuff they're showing in some of these videos are big and they matter, okay? So what you're looking at here, what they were showing is number of companies trading at a discount to net cash. And what we're going to see throughout history is every single time this hit a big number, it was time to buy, okay? So for instance, look at this. You had over 200 companies trading at a discount to net cash here. Guess what? This was right before the market started to go on another roar, right? You're looking at like 2002-ish there, and shortly after that, 2003 through 2007 was a great time in the market. Like, you can pull up a chart of that, right? You look at right here. Look at how many companies. You hit over 150 companies right here. Guess what that was? 08, 09. Yeah. What a time to buy stocks. And look at right now. Recently, we've hit the highest we've ever hit. 200 and over, 270 companies trading at a discount to net cash right now. And guess what? I feel like it's a great time to be a buyer. And so when you're in these sorts of insane time periods, you are pretty darn close to a bottom. You might not be there yet, but you're knocking on the door, essentially. And that's exactly how I feel right now. And this is just a chart that justifies exactly what you're looking for, okay? And essentially, when you see this number go exceptionally low, that's actually a time you need to be a little worried. Because look at this. When this number went insanely low, right? That was, a few months before the whole market started tanking. So the market started tanking in the summer of 2007. That's when it peaked and it started tanking. And guess what? That number hit right around all-time lows right before the summer of 2007. Look at this. I mean, think about the market we've been in, right? It hit lows right around March of 2021. And guess what? Ever since that time, stocks have been just destroyed. At first, it was the speculative stocks. It was the meme stocks. Then it was small cap stocks. Then it was mid cap stocks. Then it was large cap stocks. And then by the end of this thing, it's pretty much been every stock, I don't know, just about the whole stock market, right? And so This I think is something we should pay attention to forever going forward in the future. And if you get a ridiculously low number, like you're probably peaking in the market, at least in the short term. And if you get some insanely high number, you're likely close to a bottom in the stock market. That's what it proves time and time again. And so I really appreciate this channel for bringing this out. I think this is absolutely amazing, absolutely amazing. They showed this one here, number of companies trading at a discount. This was as a percent, okay? Because obviously the amount of companies can change over time, but this is as a percent. And I mean, look at as a percent, how many, you're over 3% recently of companies trading at a discount to net cash. That's an insane number. That's an absolutely insane number. And like I said, every single time this spikes high like that, right? Especially over 2.5%, you got a pretty good chance to buy stocks out there, right? And so it's just one of those things to look at and understand, like, if you're talking about, especially if you go over 2.5%, and especially if you go over 3%, you're likely getting very, very close to a bottom in the market. That's just what we've seen throughout history. So I think it's important to kind of look at there. So that's definitely gives me some comfort, okay? Next thing we got to talk about is Mr. Powell and why this matters so much. So if you didn't know, Powell came out today and opened his mouth again. Why does he have to do that? Okay, but seriously, like what? For a moment here, why does Powell have to come out and keep talking? Like seriously, like he's not doing YouTube videos. Like, Jay Powell, go hibernate for a little bit, okay? Chill, go on vacation. Like, no one cares. Like, go chill in Maui or something for the next 3 or 4 weeks. Like, we don't need you to talk about inflation every day of the week. We know what the numbers are. Everybody knows that. We know the Fed is planning to raise rates. We know all this. There's no need to keep coming out and doing interviews every other day. Like, we don't need that. We don't need that. We already know, okay? We already know what your plans are, and we know you're going to adjust your plans as you feel like you're going to adjust your plans, okay? But the bottom line is Jay Powell did come out and talk. Now, every time recently Jay Powell comes out and talks, the market essentially tanks, right? And the headline of this even sounds scary. Powell says the Fed will not hesitate to keep raising rates until inflation comes down. That's a threatening headline, right? Federal Reserve Chair Jerome Powell emphasized his resolve to get inflation down, saying Tuesday he will back interest rate increases until prices start falling back toward healthy levels. Quote, if that involves moving past broadly understood levels of neutral, we won't hesitate to do that, the central bank leader told Wall Street Journal in a live stream interview. Once again, why does he need to keep doing these? But whatever. We will go until we feel we're at a pace where we can say financial conditions are in an appropriate place. We will see inflation coming down. We'll go to that point. There won't be any hesitation about that. He added, okay? Now, whenever Powell would come out and talk recently, it would tank the market. It would tank stocks. And what was interesting is if you were watching the market while Powell was speaking, guess what was happening? The market was indeed tanking, right? The market was tanking. But what was very interesting about this whole situation was, and I'll explain why I got that picture up there in just a moment, okay? The market came back. And it basically said, Powell, we're sick of you. And we don't care about you anymore. We don't care what you're going to say. Do all your threats, that you want to do. We don't care anymore. And this was the first time this has happened in a long time. And I mean a long time. Where the market fell while he was talking and then came all the way back to basically end the day right around highs of the day. And so if you're talking about a break in trend, a break in sentiment and market momentum, that's a big thing. That's a big thing because everybody was looking at today and they're like, oh, Powell's going to come out and talk again. Great. There we go. Another negative 3% day in the NASDAQ. And the fact that when he was speaking, it was going down. And then we were like, he got done and we're like, I don't care. Buy it up. The fact that Wall Street made that move, because let's be very clear, that was big money doing that. That at least gives you a little sign of comfort there, right? And so there's an image of Jay Powell right now that some people have where he's like a pit bull, right? And he's like, and he's this vicious dog. And that's the way some people have an image of him right now, right? And we'll find out, is that really the truth, right? Meanwhile, other folks look at Jay Powell and they say, man, this is just a chihuahua out there. This is no Paul Volcker. This man's just a chihuahua. He's all bark, he's no bite. He ain't gonna do nothing. He ain't going to do nothing. He's all these threats, and we're going to do this, and we're going to do that, and da-da-da-da-da. But what's he actually doing, right? And so I think it is important to kind of look at things and say, what is he actually doing? let's not forget the Fed funds rate is 1%. 1%. 1%. The Fed funds rate is almost nothing, okay? And so you have all this threatening language from the Fed. You have all this, all these headlines about we're going to do this and we're going to do that. The Fed funds rate's 1% today. 1%. With all this talk, you would think the Fed funds rates would be 5% right now, 10%. So there's all this talk, there's all these threats, there's all this stuff. Ain't nothing happening. It's just more of a chihuahua type moment. You hear, oh, the Fed's talking about 75 basis points. Oh, now 75 basis points off the table. Oh, they're going to raise heavy. We're 1%, dude. 1%. Inflation's been roaring for a year now, over a year. And so they've lagged this whole situation. They might lag to the other side, right? Now, this is very important, what I'm about to show you. I mean, this is very important for everybody to understand what I'm about to show you right here, okay? Because a lot of people look at interest rate right now, and they say, there's no way the stock market's moving up if they say, this is the biggest false thing I've ever heard in my life. They say, don't fight the Fed. BS. If somebody that says, don't fight the Fed, they don't even know history. That's all I'll say about that. They don't even know about the history of the Fed raising rates and what happens to the stock market in a time period where they're raising rates. That's when I know somebody doesn't really know the history of the stock market, okay? So I went from dead to alive in 1989, all right? This is my entire life, right? Now, rates were substantially elevated, right? This is Fed funds rate over time. 5-6%. These are numbers we can't even imagine right now. We're like freaking out over 1%, right? Pull up a stock market chart of the stock market from 95 to 99. And what you will find is the stock market did flipping, flapjacking, amazing during that time. You pull it up from 94, 93, whatever, okay? During that whole period when interest rates were up in elevated levels, the stock market did very well, okay? Guess what? From about 2003 to about 2007, the Fed raised rates. The stock market did absolutely exceptional from 2003 to 2007. It did really, really well, right? And so during this time, while the Fed was lowering interest rates, the stock market actually was horrible. Look at pull up a stock market chart from 2000 to 2002. And what you'll find is, no, it wasn't pretty. Look at the NASDAQ during that time. Look at the S&P 500. Look at the Dow. NASDAQ and S&P got hit the hardest. Look at the Russell as well if you want to look at that. So people think, oh, they're lowering interest rates, we're going to have to go up in the market. Nah, that's not factual. That's not looking at data. Stock market was horrible. Then they start raising rates, 2003 through 07, and up at upper levels, and the stock market did great, right? Basically, summer of 07, that's when the market started to tank, the economy started to fall apart. But for years and years, stock market did very well, right? Look at right here. We had this, down and out interest rates for quite a while, and then they started raising rates. 2015 through 2019, man, there was a lot of money to be made in the stock market. There was a lot of money to be made. I made a lot of money in the market. I'm sure some of you guys that have been in the market a while, you guys made some really good money in those years, right? There was a lot of money to be made. There was a lot of stocks that went beast mode during that time and had some incredible runs from 2015 to 2019. So if you would have taken 2015 to 2019 off because you're like, don't fight the Fed, they're raising rates, this is bad, you would have been making a horrible mistake. I mean, an absolutely awful mistake. So now everybody assumes the Fed's raising rates and there's no way the stock market's going to go up. And I say, look at history. Just look at history. And what you will find is time and time again, market can do phenomenal for years as interest rates are elevated or interest rates are going up. That is just factual. And there's time periods where they're lowering interest rates, and the stock market's not doing good. I mean, they lowered interest rates from, part of 07 all the way to 2009. Guess what? The market was not safe during that time. The indexes fell all 50% plus during that time. So, you look at this stuff and it's like, yeah, you can have a very good market and have interest rates go up. That is facts. It's not opinion. That's facts. So this is very important to kind of keep in mind for everybody moving forward. So, because you can hear some of these things out there and sometimes you got to break it down. You say what's factual and what's just stuff that people say to say because it sounds good. Don't fight the Fed. No, Go with the Fed. They were raising rates. Rates are elevated. There's a lot of money to be made in those times. That's just factual. Hope you guys enjoyed this video. As always, make sure you check out FTX US and sign up for that. Get your up to $100 in free crypto while they're still giving that out. Use referral code HolySmokers. And yeah, other than that, guys, much love. Let me know what your opinion is. Have a great day.